Last break was about how the Thai government encourages Thais to invest overseas to soften the baht currency, as well as how investors from Asia are pouring their capital into London's commercial real estate market. Now let's take a look at how Mr. Meadows elaborates on the surge of capital in London property from Asia and the attractive feature of the London property market regarding the issue of foreign ownership.
Investors buying in London currently, and from which countries are they?
Well, there are an increasing amount of Asian investors buying into London. In 2010, in the commercial office sector in London, Asian investors made up 6% of the investment transactions. In 2011, that grew to 16%, and we predict by the end of 2012 that will be close to 30%. That capital from Asia has been largely from some of the pension funds from Korea, from Malaysia, but increasingly other countries in Asia, I think, will be participants in the growing involvement of Asian investors into London. Thailand, Indonesia are two countries where we're seeing growing demand, particularly from high net worth or ultra high net worth individuals.
And in most ASEAN countries, foreign ownership is a big issue, as foreigners are generally not allowed to own their land. So is this the case in the UK?
This is another feature that I think foreign investors and investors from Asia find attractive about London. There are no restrictions on foreign investors owning real estate in London, firstly. Secondly, you can buy freehold title as opposed to leasehold title in London, which again is very attractive in terms of having the absolute ownership and title to the land. So that has been again a positive feature. If you overlay that with tax, the UK tax regime is friendly, if you like, towards foreign ownership, both in terms of your entry costs, your corporate income tax, and more importantly, and probably most importantly, your capital gains tax.
And are there any interesting property assets offered for sale currently, and how much are they?
Well, one of the key features of London is its liquidity. So at any point in time, there are always properties that are available for sale. There are always willing buyers, there are always willing sellers. Last year, for example, in the central London office market, £10.8 billion of transactions took place. It was the most traded city globally, with New York at second position and Paris at the third position. So there is always a very strong level of available property. As we enter the final quarter of 2012, often that trading volume increases as vendors want to see sales complete before the end of the calendar year. So at the current time, Jones Lang LaSalle, who has a number one market share in London with 42%, has a range of opportunities from office, hotel, retail, residential, across the board.
Now that we've seen the attractiveness of the London property market, let's examine the risks that investors should be aware of when investing in the London property market.
Be aware of when looking to invest in the London property market.
I think it's a very transparent market. So it's a market that you can become very comfortable with in terms of a new investor. Also, many Asian investors have a strong familiarity or an affinity to the UK because of education. They're at school and university. So from that base, that gives a level of comfort. But what I think is important is London is a very competitive market. It is important to receive good advice from professional advisors, whether it be a Jones Lang LaSalle or lawyers or other consultants. Because to buy property in London, you will often have to compete against possibly other foreign buyers. And so to have an advantage, you have to be well prepared, you have to have funds available, and you have to do your due diligence in advance of trying to buy property.
Right. Last questions. What are some of the important risks that investors should be aware of when investing in the London property market, like the bubble, the property bubble?
Sure. I think clearly London is not immune to the volatility that continues in the Eurozone.
Mm-hmm.
We are all interconnected now around the world to the shocks that can be found in the financial markets. And so London is subject to some of the risks that emanate from the Eurozone.
Mm-hmm.
Clearly, the financial services sector is probably most deeply affected as an occupier. So I think, again, you should look obviously at a macroeconomic level and see then at a micro level, if you're looking at buying a property, what the implications might be on your tenants. So clearly the driver for real estate investment is demand from tenants. Look at those tenants, can they afford to pay the rent? Is it sustainable, the rental level that they're paying? Because that effectively underpins your investment. So these are sort of areas that you should need to look at as part of your review of a market like London.
Right. Thank you very much for speaking with us, Mr. Meadows.
Thank you.
It has been all about how Jones Lang LaSalle expects to attract Thais and other Asian investors to buy more commercial properties in London because of price stability and other favorable factors. As a nature of the market, property prices are relatively stable when compared with other European real estate markets. And that's all the time we have today and towards 2015. You can watch us again every weekday from 3:30 to 4 p.m. on the Nation channel. For today, thank you for watching us. สวัสดีครับ